Hello, everybody. All right, so today we're going to be talking about trend trading, particularly trading within a particular channel. And we're primarily going to be looking at um, going long, right, and looking at upward channels and in a particular trend, moving upwards and, buying the higher lows and selling the higher highs. So this is, works a little bit better with some of the large cap or mid cap stocks. Um, doesn't seem to work as well with the low float or penny stocks. So if you do trade those, you can kind of see other strategies and other videos that I've posted that detail those. But with this particular strategy, we're looking at mid cap, large cap stocks with a little bit higher float. I would say 50 to 100 million and above for float. Now, what we're going to talk about is ascending channels, moving upwards and upward trend. Now, if you seen my other video titled "Stock Market Cycles," you can kind of see that the market has some sort of rhythm to it, right? Where you have this accumulation, um, where a lot of the institutions or a lot of the retail traders are kind of accumulating shares. And then we see this markup where we see this upward trend, right? And this is going to be the basis of this video, talking about this upward trend and defining our channels. And then, after that, you see this kind of distribution before a markdown or sell off, and then the process repeats again. So check that video, to better help time your entries and your exits and get a better understanding of the overall market. But I want to go over 4 examples here, TRVN. So in order for you to determine a channel in this trend, if you will, you need to have at least 2 points where you can draw a line. And the more points that you have, the better. So here you see, the price action came and touched this point, created another point up here, kind of pulled back a little bit, moved back up again. That's another point on the resistance level, another point, and these would all be sell-off points, right? Even though the price action went above it, you definitely want to be kind of selling into that strength and into this strength as well. Now, down here, we see this kind of pullback over the course of, a month or two, and then it kind of reverses and it honors this kind of trend line within this channel and continues to trend up and down this channel. So let's take a look at another example. Now here's, as you can see, again with our video, we have this kind of sell-off, and then a small consolidation was the markup, another sell-off, and here we are marking up again, and you can see the channel being formed and the price action kind of sticking with that channel. Where you get to the resistance, it kind of sells off, then it comes back to near the area of support, and then continues to rally, reaches the resistance again, comes back, and looks like it's about to rally again. Looks like here it had earnings to be reported tomorrow. So just kind of like a caution, you don't want to be kind of trading in and around earnings. You're much better off kind of being reactive to what the earnings reports are. So just kind of be mindful of that. GPS, Gap Incorporated, as you can see, this is more of a narrower channel. But again, the price action continues to kind of honor that channel and trade within. And of course, anytime the price action breaks that channel, then you enter into that distribution phase as we saw earlier, right? As you can see that distribution. Let's take a look at Oxy, OXY. You see a reversal here, moving back up, again, starting to honor that trend. And now we're at mid-range. You kind of want to stay away from trading with price actions at mid-range. You really want to be, buying at these support areas and, of course, selling at these resistance areas. So basic, in a nutshell, how to trend trade, draw your lines with those channels, find at least 2 points at the support and the resistance line, and always be mindful of the market cycles, and good luck trading out there.